become so sophisticated now in terms of tracking the demographics and the behavioral patterns of the consumer that it's fairly predictable which clients are at risk to have more accidents than the other clients. And those people are rewarded with lower rates and even the safe driving rewards for continuing that behavior.
What kind of behaviors what kind of behaviors come into play when these decisions are made, or the computers are obviously doing their thing? What are these behaviors?
There's several concepts that are being looked at statistically. The primary drivers are your claims history.
Okay.
Over the last 2, 3, 4, 5 years, that's about as far back as anybody looks. Have you had any, or how many accidents have you had?
Okay.
And then the other concept is severity, which means how much money was paid out due to the claim that was filed, the accident that occurred.
Okay.
They take a look at personal history, consumer reports in terms of whether you had speeding tickets. There are major violations as opposed to minor violations. Parking tickets and other things don't count. Speeding tickets, running red lights do, and then you can get into some more major violations that count against you heavily. They also, the majority of the industry does now take a look at a consumer's, we call it an insurance score, which is based on that person's credit report. It's not a credit score, but it's an insurance score that's derived from the contents of the credit report itself.
So if I apply for insurance, then you're not running a credit report, but you're generating a credit score?
It's an insurance score based on the credit report. And our scale actually runs from 1 to 18. The lower the insurance score, the better the rate that you get. There are factors in there that are not what typically a lender would consider. This isn't a lender score. You can have walk-on-water credit in terms of a FICO score of 800, but there might be something in the background that would cause your insurance score to be less than the best score we have of we call it an IS, insurance score 1. An 800 FICO is an excellent score, or at least it used to be. But now it's to the point that that there could be something out there in that person's credit history that might give them a 4 or a 5 as an insurance score. We don't see very many 1s or 2s. When we see them, it's that we know that person is exactly what the insurance industry is looking for,
right,
in terms of a prediction of future potential claims activity.